Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Marco.
Oh, hey. What's up? Oh, here we are. Okay, cool.
Yeah. All right, good.
How you doing?
Doing all right, man. We are kind of an interesting board today. We're interesting market. You know, the election's going on today, and why don't we see what we got? Let's just jump right in there. I think the one that I've gotten a couple emails and people ask me more questions, which I don't really know except what I said yesterday. Is this FUTU? You know, it's had a big pop today, and you know, I think that look, it's one of the reasons why I went with that story. I'm going with that story. Looking at that story is it's simple, right? And sometimes simple is the best way to look at things. So you look at this thing; it's up 20% today, $10. You know, is it should be up 10? Should it be up 50? Nobody knows. This is, you know, the next Robin Hood of China. I'm sure these websites. The 4chan and WSB, the Reddit channels, they're going nuts with, you know, what the possibilities are. The stock looks tremendous. We talked a little bit yesterday about breaking out of this sort of flag. So, you know, look, if people bought calls and they made some money and they're happy and people saying great call, I'm just trying to find these particular spots that could potentially be explosive. So that one is good. The Micron looks like it went up, but I don't think, you know, I don't think that was anything. Micron is $3-4 is not something that let's just here. Hold on 1 second. I want to make sure that Micron being up $3-4 is not something that is, you know, is super exciting. But what is exciting in Micron is that we're seeing someone actually roll their positions. And that's a little bit more exciting, right? That's a little bit more exciting. Let's see what's going on here. Is your seems like my chain is in a little bit of trouble.
Let me see mine.
Can I see yours?
Right, okay, here's mine. You can see it?
All right, good. Yeah, go for it. So show me Micron.
Okay. Yep, here it is.
So I was looking at something with, you know, what I look after the earnings is also important to look to see how people react. Like, what are they doing? What's their action? What do they take? What we're actually taking right now? And you could see that they're involved in the January 77s, right? The 70 calls. You see 20 something thousand option there. So click on that. Let's take a look at where they are.
Which one? The 77s?
Yeah, the 77s in
January 15th.
January 15th. Yeah, January 15th.
Yes.
Why don't we do this? I got mine up here, so let me switch back. You want to switch back to my screen?
Cool. Yeah, yep.
All right, so we switch back to my screen here. So I'm looking at the January 77s, and you know, I'll take the shading off a little bit here, but there was about 20 something thousand here in the 77.5. The stock's up, you know, right now it's up 3 and change. It was up a little bit higher. You can see here Micron was up way up to about 78.5. So it was up a little bit. Looks like somebody's getting out of this, but if you look, you could see that they're actually getting into looks like they're getting into the E5s. So if I look at these E5s, it looks like that roll happened, you know, 14,000 and 9,000 is 23,000. So it happened right around here. Looks like they sold those and then they bought these. The vol was actually up a little bit here. I mean, after the earnings, usually there's an IV crush, but it was up a little bit. So it looks like they bought They, and not only did they buy them, at 77.5 strike, with what they had, they actually moved up. So they bought the 85 calls to give you some idea of where, they think this stock can go and has legs. Will it happen overnight? No, they're positioning themselves for next month. But I think it's interesting to see, again, if you bought the 80 calls in January yesterday, these were, probably, I could look them up, but the January 80 calls were, I think they went out at around $2. And today, $1.30, and today they're $2.15. So it's not terribly exciting. So yesterday we talked a little bit about buying options, or call options, put options in front of the earnings. As a play, it's not something that I would advise you not to jump into that game too much. It's okay to play it once in a while. You think the earnings are going to be good. You think the option is priced a little bit, and the possibility of returns are great. I don't mind it, but I would just say it as a strategy. It is very, very difficult to play this earning game back and forth, with 5, 6, 7 flips of the coin.
So the fact that they're rolling into February means there's more to the story, probably, right? So that could do some digging, right?
Right. So that's what I'm trying to say. I'm trying to say, one. Remember, I said that they were buying options back when stock was in the 50s. This was going back into November, right in before Thanksgiving. They were buying options, okay? And I was looking at it, and I was saying, maybe I wait to see if this, long a lot of calls. Right, let me wait to see this thing breaks up. It broke out and went really quickly up to 70, and so now stuck, sort of watching. But they were positioning themselves here for a 6-week move. They did get the move. Now they probably in front of the earnings. Okay, so if you're long, let's just think about that. If you were long at 53, and then it gets to 74 right in front of the earnings announcement, right in front, don't you take some off here? The wise thing to do is say, I just made $20, and it could still go up. I believe it's going up, so I'll just buy some dollar calls or $1.50 calls, see what happens, and then reposition myself after the announcement, see what the stock does, and then get back in. If the stock goes back to 60, I'm going to jump back in a much bigger way. If it trades up to 78, okay, then I'll just actually take those calls in the 77s, and then I'll roll it up to the 85s for another month, because I think this could go to 100. They're not the only ones that they can go 100. If you're looking at the news, you see Citibank raise their numbers and their price target Micron to $100. So that's probably a little bit more longer term, but they're talking about the DRAM market, which is what Micron's in, and how at the end of a market it's very bullish, and the stock should trade towards that level. Let's just look at the stock here. I think I'm gonna cool. But you have Micron here. Obviously, this is a big move, large move. It didn't go down. It did not go down. It stayed sideways, which is positive. And now it's broken out here a little bit higher. So we're going to see whether or not this holds. Here people are, someone betting 85 with the 85 February's, and Citibank is saying it can get to 100. So I would say that the market has to go along with this. So a bullish market, stock market, bullish tech, and you got a stock that they think is bullish. Like you can, start seeing this one, pay attention to this one. One thing that, I like this. The reason I say this is bullish for, there's obviously people that are much more of an expert in looking at these types of and looking at tech analysis. I just sort of like to point out sort of the simple, if stock goes, and this is how I would talk to anybody, that's just beginning. If a stocks generally do something like this, right? In general, they go up, they go down, they go up, they go down, they go up, they go down. So if I told you what's the pattern, you would say up, down, up, down, up, down, up, down. If I then said, okay, well, what would you expect on this leg? You would say down. And if the leg looks like this, and you're telling me that you would expect down, you're probably right, because that's the pattern. But if this leg sideways, then that is a bullish look on this stock. And so it's important to find, technical analysis and options are obviously very, very important. fundamentals, not as much in options. Fundamental long-term, trading or long-term investing, go together like, ham and cheese. This options game is more suitable for understanding options, for the investor to understand options and understand analysis and psychology. And so we've been talking a lot about that over the last few episodes, about psychology and what people are thinking, what the crowd is thinking versus what we're thinking, because you're looking for those outside moves, and those outside moves happen when people are positioned incorrectly, and they might jump. They might jump because they're either short, now they're getting squeezed higher, or they're too long and now they're getting pushed down. So psychology, technical analysis go hand in hand with the options play. And then the fundamentals, we're not doing a deep dive on the fundamentals because frankly, the next month or two fundamentals don't necessarily matter too much unless the world just says, okay, we're bringing everything down, P's are going to come down, everything's got to come down. That's still not telling you what it's actually valued over the long run. So I think it's an important thing to separate when we say we like a stock, we don't like a stock. It's not because I'm a big believer that FUTU should be 100. I'm just telling you that, there's no reason why it couldn't be 100. And this is why. So in Micron, they're saying $100. They're trying to give you the fundamental analysis on $100. Right now, what I'm looking at is that it just broke 74. It had 3 days of decent volume here in front of the number. The number was pretty good, and you have this 70 to 74 level where people can look at this in many different ways. You can look at MACD, you can look at RSI, but I'm looking at it pretty simply that it traded from 50 to 74. It gave back 4 points over the course of a month, and now it's trying to make its next trend. And you got analysts saying 100. So, and a guy who's willing to actually buy more calls up 1 month to 85. So it's something that you want to respect. At the very least, you want to watch this, you want to respect it, should be in your radar. Any pullbacks, you should be looking at how the market reacts at 74, Marco, to see a buyer. Like there should be buyers at 74. So if it gets to 74, you want to see the buyer pop up. If it doesn't, then your next stop is 70. You want to see the buyers there protecting this. They protected it here, they protected it here. If it gets to 70, you want to see that. Break 70, something's changed, something's fundamentally changed, sort of the setup. Is that fair?
Yeah, that makes sense.
Good. So Micron, buying calls, buying upside calls, moving out, seeing the earnings, taking some money off the table, putting the money back in February, upside calls, 85 calls. Again, it's 5 weeks out, 6 weeks out. Bullish. Micron, people are bullish here, and the money seems like it's coming in. So that's what I see. That's one. And then I'll just tell you the second one that I'm looking at today is TEVA. TEVA, TEVA. Just look at the stock first to get a sense. By the way, since we're talking a little bit about technicals, this morning, what I tend to look at, and what I would ask you to look at is, whenever you're looking at any chart, first thing you should do is probably look back at least a 5-year chart. Just try to get a sense of what's actually happened over 5 years. When I see something like this, I go, wow, what's happening in TEVA over 10 years? I want to see the top. Where was that top? Okay, so that top was in 15, traded 67. It may even go back, but this is good enough for me. And then it just dropped, and it's down here. Now, I know that TEVA was involved in the opiate crisis. There was some bribery charges against them. I think there was like price fixing. The trifecta of fraud and bad acting, hit them here. They got a new CEO somewhere around here. And ever since, the stock has been lingering and just trading low, but it can only get to zero. And when I look at something like this, I think, okay, people were short. Actually, Melvin Capital, who we've talked about, was in GME, was actually short the same, buying puts, pressing, buying. They rode it all the way down. And then it looks like they got out of that position. And now I don't know if they're in. Actually, we should just check. But I do see that there have been call buyers in TEV over the last few months, and excuse me, I would like to just see sort of if anybody pops up on the holders as call buyers. But I have seen call buyers here. Obviously, when you talk about lawsuits, there's lawyers involved. There's teams of people that are involved in communicating what might be happening, or what they think is going to happen, or position themselves. Whenever I think of a situation where there's a lot of humans in the process, I think of I think of someone out there could potentially piece together the story by talking to as many humans as possible. When is there going to be a settlement? What does the settlement look like? Is the person mad? Is the lawyer upset? Is the lawyer more excited today than was 5 months ago? Is the lawyer buying a new house that's going to be worth, he went from a $5 million house, now he's buying a $50 million mansion in Miami. You start piecing together the puzzle of whether or not, who's going to win this lawsuit and how much TEVA is going to pay. So, that's how I think, right or wrong. I think that some more people means the ability to get more of the answer. I'm not saying I'm not even talking about the legality of it. I'm just simply saying there's more room for error for someone to slip a little bit or say something or hear something, a little birdie chirping. So that said, I do see that I don't see very big. I see BlackRock, is in there. They've buying, but that looks like a bond. They had some very small puts, 1,000 puts, but they're long there. And I do see Citigroup here calls, but these are market makers. The banks are going to be market makers here, so they should be. Other than that, I don't see a lot of calls. I'm going to go quick, so you want to close your eyes. And I'm going to jump down to the put section. So you really want to close your eyes. I'm going to jump all the way down. And I don't see anything super exciting on the put side. Okay, so the puts, it used to be that I could tell you, I'm telling you that Melvin had 40,000 puts, 50,000 puts. They were rolling all the way down. They caught the whole move down. They're not there on the put side anymore. They're having some call buys. I have seen buys here, and now they're popping up again in front of the earnings. It's a 30-cent. It's a 30-cent call option in TEVA. We looked at Micron. It's a 30-cent call option in TEVA, but nonetheless, people are starting to accumulate some of these, and you can see here 98,000 traded today. That they're looking at 12 calls. These were the stock actually not trading up from this morning when I looked at it, but this is something to keep an eye on. It looks like they're rolling. So from January, they were long Januaries. Same thing. They're going to expire next week, and they want to get out of this position and rebuild the position over here into February. So you get earnings. What are they going to possibly say? I mean, look, the stock is the new CEO. He's cutting debt. He's lowering expenses, and he's trying to move this company back up. Again, they have this history of bad acting, if you will, bribery, price fixing, opioid issues. Years have gone by. They're trying to clean this up. They say something positive. Is there a positive vibe to this story that comes out next couple of weeks? Somebody's putting their money to their mouth. Their money where their mouth is, and I think it's worth looking at. I think this one is interesting, and they're buying options today, like going outside. This was only 30,000 before when I looked at it, so they've been buying. I saw it here, 3,000. It looks like they've been buying more since, and the stock has been going up. So TEVA call options, February 12th earnings, and they're specific. They want the earnings. They're not buying the Marches, Junes. You could have bought the Marches. Let's take a look at this. You could have bought the Marches today, for 50 cents earlier today. Let's take a look at this, just to think about it. You could have bought the Marches for 50 cents. A little bit ago, 40 cents in the morning, and now the Februaries are trading 65 cents. So this is an interesting development. It's something that, it's worth a look. Again, we're looking at a 10-year chart, but if you start looking at, so you look at the 10-year chart and then you close this gap here and you say, all right, let's just look at what happened in the last year.
Could you also go through and show where they think it's going on the
sure
as well?
Sure. So you look at this gap, right? I'm looking at this gap here. Let's go look at really. So, clearly to me, again, simple lines, in any of this thing, whenever you're trying to do technical analysis, simple lines. So I'm just going to draw a simple line there because I see, if I'm looking at patterns, I see low, drop through, and then comes back to right around this level, right around where these lows are, so-called 11 to 11 and a quarter, stopped here, and we're back here again. Breaks through this, then what do you have up here? Somewhere between, me just drawing, I used to like crayons when I was a kid. So 13 and a half, this is sort of this level, and this level. So we got about 13 and a half. So breaks 11 and a quarter, you're looking at 13 and a half is where it's going. So they're buying the 12 calls. They're paying, 60 cents. They think it's actually going a lot higher than that, right? So let's take a look at what they're buying just to analyze, right? Because we spot TEVA. They're coming in for call buying and, 14, 13. So I got to be somewhere around, let's call it 15, 16. In order to buy this option, I think I have some edge. You're looking at $15, $16 on an $11 stock over the course of the next 5 weeks. 15, $16. Let's go back to our chart. Does that make sense? Well, we get to 13 pretty easy. I can say, this move is pretty quick. Had a big move here sideways, wanted to move up, but for whatever reason, dropped here on some news. So let's just go back. Let's go back 2 years just to see where the next level might be. And, okay, so if we break this level, 13, there's a gap here at 14. So, this is a very, very big level, and it's going to take something, you have a year of messing around below this level, getting way down to 6.5. You got up there once, twice, 3 times, a bunch here, come off. It needs to be very good, obviously very good news to get it through this level. And then you're going to have to get it sort of above this 2.5. But somebody is obviously putting their chips down that this is going to break this level for whatever reason. And it's going to, this gap right here is what we're looking at, this right here. So $14 to $15. So, someone is thinking that positive news comes in the next 5 weeks. Obviously, it's in earnings. Maybe he says in earnings. Maybe they make an announcement that says they're settling, and the settlement. What happens in these settlements is that the market prices in disaster, prices in potential for bankruptcy. So we can go again. Let's go back here just to see, when the news is bad, when there's price fixing, when the SEC is getting involved, when you have massive, massive lawsuits that take the company down, then everybody prices this thing for bankruptcy, which are, still a good company. It's trading at $10, it's making money, has a lot of debt, but it's still a viable company if they get through. But they price in that the lawsuits might be X billions of dollars. Well, if the lawsuits come out and he says, well, you know what, we're going to settle, and we're going to settle at 50% backs, then that's obviously positive news because the price reflects what has been built in on this downdraft. So someone here again is thinking, look, in the grand scope of things, $15 is nothing. So, if you get positive news that starts swinging the other way, the stock is only trading at like 8-9 times earnings, which is it's abnormal for a regular stock, but it's not a regular stock. But if it starts becoming and starting to look like a regular stock, and it's the beginning of looking like a regular stock, then pricing should be 25 to 30 probably on this type of name, or call it 20 to 30. So you're talking about double from 11. That book could be a year from now, but at some point, if it starts looking like it, the market is going to price in 30, 40, 50% of that. So that's how you feel about it. It's if there's news, if there's positive news and we're going the other way, it's a $25 stock. Today it's 11. If he says something in 4 weeks, or there's an announcement and we start getting the idea that we're going to get to normality in this particular name, then we're going to price in 30, 40% of the move from 11 to 25, which is $14. So 30% of 14 is four and a quarter. Call it 420, and 420 plus 11 is 1520. So that's how I get to 1520. Right. So somebody is thinking normality. We're on that turn to normality. Makes sense?
That's a really good analysis. I like it. And to me, from what I've seen, it kind of seems like a textbook example of what we should be looking at in a trade.
Right. That's exactly how I want you to look at it. I want you to see, TEVA. I know the story. I've been watching this for a while. I've been watching shorts pile on it forever and ever. Now the shorts are disappearing. And now, is it going to become a regular stock? Not to some extent. To a large institution, $10 stock is $10 stock is like an option to a large institution, and so they don't know exactly when normality may be, but they could take a shot here and say, I'll use X dollars of my, X dollars of my portfolio, and I will say maybe 0.5%, and I'll just throw it in, TEVA, and TEVA might be 2-3x in the next 2 years, and that'll be great returns for that particular position. So that's not a game we're playing. We're playing options. Someone's looking for a big move quickly. I don't know why. They know why. They know what they're doing, and they know what they're looking for. So we're sort of leaning on them to say, TEVA doesn't pop. I mean, in the last 4 years, TEVA has not popped up on the unusual option activity board with call options often, right? Okay. It's not like Apple needs. So I know just from looking at this a lot that TEVA, the number 3 on the board, that's something to look at. It doesn't usually happen. Whereas I see NEO up there every day, right? NEO right. Every day, right? It's volume after volume every day, but TEVA not so much.
So that can be kind of an indicator between day traders and a shark coming into.
Right. That's another thing to the day traders are not looking at TEVA because it's not necessarily mainstream day trader stock. NEO is, BABA is, FUBO is, QS is, the Mara is, Lee is, so I'm looking for names that are outside this, day trading mentality where we're trying to make the next $2-3. It's interesting. This again, for you, this is always going to be nuances, right? I don't mention this in the education that, but the reality is I like looking at TEVA today because I never see TEVA. And for some reason, TEVA popped up today. So somebody woke up, I always, the visual I want to give you is that someone woke up this morning and they said, I have this TEVA position and I have to do something because it's only 6 days. And they thought, today I got to roll that position. We still love the position. We still think there's a lot of upside. So I want to roll that. I want to make sure I get another month, or I get 2 months, or get 4 months. But he chose 2. He chose 6 weeks. So he's focusing on earnings, I think, or he's focusing on some announcement that's going to come out maybe right prior to earnings, so the day earnings. But someone, woke up this morning and was thinking, I need to roll. And it's almost like morphing to their body and understanding. And again, I always go back to what this stuff starts to do. It tries to get you to think like these guys. And there's, for some reason, it could be just that it's a week and a half before earnings and he wants to move. But he wanted February and he came after it and he's still coming after it. And you could see how he's buying it. He's buying it in chunks. He bought a chunk. He came in, didn't flinch. Somebody came in and bought more. Maybe it wasn't him, but I believe it's probably the same guy. Or someone, remember how these guys work. They buy and then they tell a friend and then a friend buys. Or, they're all in it together and they're moving together. So TEVA, Micron, TEVA, right. Those two that I'm looking at.
So that would explain such a huge volume, because sometimes you say that even catching a short can do like 5,000 volume. Right. So much higher than that. And
right. Generally I'm looking, this one is a player. You're looking at volume. It could be 5,000. Generally try to do 5,000 to 10,000 to 15,000. Somewhere around there is good enough. This one's a lot more, but I also look at dollar amounts that they're spending. Like this one, he started off buying a 30-cent option, 40-cent option. You buy 30,000 times. That's, $900,000, $1 million bucks. Now it's starting to get serious where he's spending, $4 or $5 million on the money call option that he thinks the stock can go up 40% 6 weeks. And that, that's a very specific bet, right? That's very specific. Remember, this guy can buy as many shares as he wants. Right? They have enough money to buy millions of shares, but he's choosing not only to buy millions of shares, he's actually choosing to buy options on what I consider an option. So an option, what I consider an option, what is this guy thinking? This is to some extent starting to feel like it could be a little bit of an explosive upward position.
So my question then is, so we shouldn't be looking primarily at the volume numbers as much as volume times the premium.
Volume times the premium. Also placement in the money, out of the money, at the money. What are they buying, right? If it's in the money, I'm more to inclined that it will move. They're getting out of the position because they've already made the money, right? Mm-hmm. The Micron is in the money right now. He made the money. He's selling out to do something else. So not again, some of these big guys do buy in the money options, but that's the longest term. My bosses used to buy in the money options but they were really buying was stock and the out of the money put. That's what they were really trying to buy. So they were buying the out of the money put. So in these scenarios, you're looking at how much total volume, how much premium is spent. You're looking for abnormalities. Those are clues. TEVA not being on the board for a while is a clue that, hey, what's going on here? Let's take a further look here. This guy still wants to buy it. He still wants to be long. And I think that's important to kind of look for these things and see, like a detective does, right? You walk into, I always say, I'm always talking to you about, you're a detective. You walk into a murder scene, and every detective is going to see different things. And so, I want you to look at the chart. I want you to look at the option analysis. I want you to look at the target stock price that they're looking at. I want you to look at the volume. I want you to look at the money, in the money, out of the money. I want you to pay attention to skew a little bit. I want you to look at, is the implied volatility 150 or is it 30? I want you to look at, has this buyer been here? Are we talking about the same name 3-4 times in a row, or in the course of weeks, it keeps popping up. These are all clues into a bigger story. And remember, we're trying to narrow our guesses. So, this is a good example today of something that I see that is a little bit odd, that immediately gets my attention. You can go down the list. NEO, obviously there every day, all day. Boeing is something that's usually not here at the top of the list. So that one's interesting just to figure out what's going on. But the IV is negative.
Mm-hmm.
Okay. JD is in the penalty box for me. I can't even stand looking at it. I puts in this thing and it didn't work. I mean, it looked good on the chart and go to JD. It's a disaster. I should have said calls instead of puts. And, it's Bob was getting hit. The idea was that the Chinese government's not going to allow, these big names to sort of dominate their culture and dominate their industries. And you got mom and pops. JD makes most of their money off of, the third tier cities where they need obviously transportation and goods coming to these cities. But this is a big company coming into these smaller cities that are ruining mom and pops, which is the heart of what China wants to build as a middle class. And the thought was, if they're coming after Baba because they don't want the lending and the middle class getting loans as much as they want, because that ultimately will hurt the middle class in the long run, then maybe destroying their ability to earn in stores might hurt them as well. 80 breaks 80. This trend line to some extent was broken. Breaks 80, trades 65, right? And so the risk reward was there, and it's difference 4 letters, right? Puts, calls, stocks trading 95, and stocks trading 95, and even worse, even more, salt on the wound. Stock is trading, $20 higher, and buying calls like it's going out of style. So, this isn't a penalty box for me. I just don't even care to, 13,000 of the 95 calls, with the vol up, and, it's move to the next one. I honestly can't even look at it. It disgusts me, because these Chinese stocks, you hit them, you either hit them big or you're going to, it's going to go make you look pretty dumb and go the opposite way. So that one, we're going to pay that one. Where's the next one?
For sure.
That was a loser. What are you seeing?
I'm seeing a lot of stuff going on in the oil.
Okay.
And the oil hit, I think, $50 since February, first time since February.
Yes.
And like there's Exxon, there's MRO, Oxy, BP, all kinds of names there. So my hunch is, that's what I want to ask you to confirm it, is that it's mostly, my guess is day traders just hopping into these, and because I see expirations in January 15th, 8th.
Yeah. This is a tricky one. I do see the volume. These big oil names, I think, are coming in to buy these things. I've kind of seen enough here to say, okay, like they're positioning themselves. ExxonMobil got the upgrade from Goldman Sachs a couple of weeks ago. So I pay attention to big upgrades by Goldman, things where,
people can say whatever they want about Goldman, but at the end of the day, Goldman wants to be right. They want to be right. They want to pick the bottom and be right so that they make their clients money and then their clients pay them back. They want to be right, okay? And Morgan Stanley wants to be right. So when Goldman makes a big upgrade on an Exxon, I do pay attention. I've been waiting to see, it traded up and started trading, sideways for a while here. I'm convinced that, okay, they've gotten some money to come into the space. They're buying the 45 calls in February. January looks like this is just eyeballing. Looks like it's a roll. This right here, I don't really care. Again, 3-day options, 1-week options, I don't care about. But February options with the earnings is something that I'm going to pay attention to. The 45 call, I don't know. I'm looking at 45 open interest. This is something where I'm going to think to myself, is this real? Is this, did somebody short calls and then they're buying calls back today? Because the stock's up 3 and they just want to cover. That's what I have to do more data. I have to start looking into this open interest and looking into past historical open interest, figuring out when they bought these, what they did. It's a lot of work to start figuring out. And then after doing all that work, I still may not know the answer. Right. So it is work to start figuring out what's really happening here. But then you got like Oxy. Let's see if this works here. Oxy. February call options here again, acting well. Is that right? What did we do? Oxy, sorry. That was all. Let's try this again. Let's try January options in Oxy. Okay. Let me remove this. And February, let's go here. There's something wrong here, so I got to check on that. But it looks like there's some data, something there. So we'll go back to that. But what was the other one? MPC.
Right. Marathon.
MPC.
Right.
You look at here's some.
I'm seeing a trend of a lot of February 19s.
Yeah, the free puts in MPC is something. It's a little odd. Maybe someone's getting out of the stocks up here, but MPC is one where Elliott Management is in there. They think they've been buying calls. They think it's going to 60. This stock, they love this stock. They're long all they've rolled down all the way down from back in the day over here when it was going down. They've been buying calls, call back, all the way down here, all the way to right around here. They were buying 35, 40s, 45, 60. Long a lot of calls, a lot of stock, Elliott Management. So this I would just look at quickly. I don't know, but what was the other oil name? Obviously, Oxy, Exxon, doing well.
MRO. And APA looks interesting. There's a put buy here.
MRO in 15. So yeah, so this stuff is, to me, it looks like there might be, maybe there is, I don't know if there's an earning. This is open interest. This is somebody messing around here. Plus, it's under $10. I really don't take a look at it. It's hard to maneuver around these. But I would say that there's a lot in the oil sector in the junior options over the last week. Again, I think people are trying to catch this 1-2 day move up. Maybe it's the Georgia elections that the Republicans win. Maybe that would be good for oil and sort of slow down this energy move. But maybe that's the play. Maybe the play is now that I'm thinking about it is let's buy these January options, play around in the January options right now as a little bit of a placeholder so that if the Republicans win, then, and these things scream because Biden's plan of, this energy transformation slows down, at least. It's not going to be $2 trillion. It'll be a lot less because the Senate's going to hold it down. It'll be a placeholder. It's like, we don't want to miss oil. But if the Republicans do win, then we might make a little bit of money on these jobs, and then we're going to go buy the stocks. Maybe that's what they're waiting for. They're waiting for today. So tomorrow might be another big day in the movement of oil stocks. That could be the reason why we're seeing a lot of January options, because it's think about it. If you were going to go buy, let's just put it in hypotheticals. If you were going to go buy 5 million shares of a company, but you're waiting for the Georgia elections to finish. and you're going to get your answer on whether or not you're going to buy 5 million shares for the next 2 years, then you might buy the January options to just protect yourself because they don't cost that much, and you don't want to miss by 5 million shares. You don't want to miss these stocks going up so much if without you buying it, right? So a little bit of, like, I call it a placeholder, where they could just throw it out there and say, geez, if we miss ExxonMobil up another, it's up 2-3 today, it's up another 3 tomorrow, then it went from 40 to 46 and we didn't buy 1 share. At least we'll make money a little bit on some bulls.
Right.
That could be sort of the play. If we're wrong and then and the Democrats take over and oil be under pressure, then maybe we can just think about buying the stock at low prices as it's coming off. Something like that. So that's why we're seeing the January, but I don't particularly like following, this type of movement. But when you see Exxon trading February after earnings, it starts getting to be a little bit more exciting. And the way the stock is trading, again, more exciting when you see things like the stock forming, the stock doing a nice formation, options corroborate that formation, and then some fundamental backdrop that you could say, you know what, people are come into this sector.
Cool. We got a few folks asking about Mara.
Yeah,
Mara.
Bitcoin. Tell me how Bitcoin's doing. I'll tell you how Mara's going to do.
Right.
Mara, Riot, these things, these things are going to be driven by Bitcoin, right?
Yeah.
You have volatility at 200, so you're going to make it expensive game play. Not saying that just because it's 200, that these are too expensive to buy. I'm simply saying that this being 200 means that this stock, the market is telling you that this stock could be explosive, but it could also go back down to $8, right? And pick your poison. So Mara's up, it's doing well. The chart looks fantastic. As far as it being on one side of the mountain, it doesn't look like it's on the right side just yet. Maybe it makes one quick move or another move up to, like, I could see it both ways. In the short term, it can go to 8 and then make its move to 25 if Bitcoin makes its move to 65. Or this has earnings not until June, but this thing could Bitcoin start trading towards 40,000 and then Mara makes a big move to 22. But at the end of the day, it's driven by Bitcoin, right? Mm-hmm. Mara, Riot, they are stocks that are driven by a commodity, just like oil stocks are driven by oil. And so, this stock on a chart basis, I mean, it looks, can't argue with it. It's momentum, and it wants to go higher. Give it a reason to go higher, and the stock is going to explode. Is it worth it? I don't know. I don't know anything about the fundamentals of Mara, but you can make a story for anything with Bitcoin. Oil stocks, when they were hitting 150, every oil stock was worth 7 times what they're worth right now, right? Then oil stocks dropped, oil drops to 20, 30, and look where these things are. So it's all, if it's a commodity, the commodity is controlling how that company is going to make money. In this case, Mara, Riot, tell me what Bitcoin's going. Its next move is Bitcoin 20 or 65. If it's 65, Mara could trade 40 if Bitcoin is 65, right? Because there's so much you get in these smaller companies, get so much leverage to, think of all the gold players of the, in the 1980s, when gold, the assets start flying, gold stocks. If you were in gold stock, it was the gold rush. It was $2 stocks were going to 80, right? And you can 40 times your money. Bitcoin could be something like that, where, anything leveraged to something that's moving that fast and that high, you get these stocks with an enormous amount of leverage that can go from $2, $3, $4 to, $60. Show me Bitcoin 65. It would be a craze, and the stocks are going to be ridiculously higher. Right as well. I would never short these names right now, because they could actually be, when it was 10, we were 12 right here. We were talking about 28, and people are telling me I'm nuts. And I'm telling people, just be careful. You don't want to short this thing. I'm not saying it's valued there or not. And, the bulls are telling me why it's valued at, a lot higher. And the bears saying this is ridiculous. It was a $3 stock 6 months ago. I don't know the answer, but I know that when you're on this side of the mountain, anything is possible. There's no stock that can't reach. There's no stock level that can tell me it can't reach, but when it gets to a certain level, You know, we're going to keep going to this mountain because every one of these stocks will look exactly like this. When it gets to a level, okay, and you're at, you know, one side of the mountain. Okay, so here's QS. Okay, this is one side of the mountain. Okay, it stopped at 130. It could have stopped at 200, right?
Mhm.
You know, but it stops at 130. Once it starts going down this side of the mountain and you start hitting here, now these shorts have a clear stop. If this thing gets above 130, it shouldn't. It probably shouldn't get above 95 in the short view after doing this move. But if it gets past 100, they're going to worry about 130. And if it gets past 130, this could trade a lot higher, because at the point, it's probably not supposed to trade 130. Not for a while. So if it gets there, there's another side of the mountain, right? There's another side of the mountain coming. And the only thing I can show you to, you know, on how to think about that is, you know, here's a stock Tilray, which is, you know, a marijuana stock, cannabis stock. And, you know, you talk about go back 3 years, you know, this was a $17 stock, traded up, and then it went literally one day went to $300.
Wow.
Okay, then it traded down to $100, and then everybody started thinking, okay, now it's going to come back to reality, and then it went from 100 back up to $180. So, you know, the shorts, once you get on this side of the mountain, the shorts are on it, but they're very aware that you can get this snapback move to some level that was, you know, on this side of the mountain, and eventually you start knocking it down. And that's how the shorts play the game. They get heavy on the other side, and you can look at something like FUBO, which is going on right now. You know, can FUBO's up $5 today? Of course it is. I mean, it's, you know, there's no reason, there's no right reason. It's just, I'm telling you that the shorts are on. I'm sure the shorts are on this. I'm positive they're on it now, more so now than they were here, right? On this side of the mountain, the shorts are very careful. They understand that they've lived a long enough life in these types of markets to know that this could happen. And so they're careful. But now there's a clear, you know, risk right here, clear point in time, 62 and a quarter, that they know if it gets back 62 and a quarter, there's no more upside, you know, limit anymore. This to them is their limit. So they're thinking this is worth 10 and 60, 10 and between 10 and 60. So they made a lot of money here. They probably covered here, cover. You know, when you start seeing the short reports, by the way, at 27, 30, look, the short reports came out here, 32, 30. You know, who's probably covering right around here? The people who got those reports, because they've already made money at 52, 47, 42. If I saw their books, they probably already short going down here. And in fact, when they put out those reports, they're probably covering a little bit over the last few days afterwards. So they put out the report reads, you know, however it reads, they make their case, and they're using that report to not everybody. I don't want to say that. How about this? I don't know for a fact. I don't even know if they're doing this, but I can tell you what my thoughts are. My thoughts are that they're probably doing this. They put the report out, it's negative, and they're using that as a liquidity to buy back some stock as it goes lower. That doesn't mean they're still not short, but they probably have less of a short than where they were up here. So they have, let's just say, use numbers, 1 million shares. They're coming here. They probably reach one level. They buy back a little bit. They buy back maybe a little bit here, and the reports come out, and then they're buying back here. Now they're not. You see this? It going up means that either shorts are buying or people are trying to now play a bounce,
Right?
And they will get more. They will get more courageous shorts, probably around, give me 40, 45. They're licking their chops again, and they're going to say, let's get back in there. But they can stop themselves at 62 and a half probably, or they're going to get real nervous right around here. So 40, see, it's the window now is the risk reward is 60 to 10 to 60, call it, right? When you get to, when at 50, you know, you have $10 of room, and you got 40 to the downside. When you get to 22, you got $12 of room, and you got 38 of upside. That's the wrong, that you just flipped. The risk reward just flipped. So when it gets to 40, 45, now you're 15, 35. That's a lot better. You see how that, you see the box we're making? Marco? I think I lost you. Anyway, I'll take it from here. I think we lost Marco. But what we're doing here is looking at this box from 62 to 10, 62 to 10, and as the stock ends here, this is now 22.10. That's 12 and 12 to 62. So that would be 50. And Marco's gone. Can anybody hear me, by the way? I hope so. Let me see a couple comments. I'm looking at the comments to see if people can hear me. People could hear me. I see. Could we discuss a bit on CCJ, please? Good. I'll discuss CCJ for a second. Let me see. Let me look at Bristol Myers. I'll talk to you guys one-on-one here, but let's look at Bristol Myers, because Bristol Myers has seen call buyers over the last couple of days. It's actually, I think it's interesting because you're seeing these same call buyers in February and March. I've been watching this call it in the last week. There's been buyers of these names in this particular these expirations, and I think it's worth a look here. 62.5 to 65s. This right here, 10,000. Again, day trading here, I would say, not sure that's I'm not sure what that is, but I would say more focus on this. The open interest there in the February options is 62.5 and 65. 62.5, 65, and it looks like they're buying more options today. The stock is also cheap. Fits in obviously the pharmaceuticals over the last few months. So this one, and they talk about this one, ABBV. Those are names in the drug sectors that people think are cheap. They have a dividend, and Bristol Myers has some growth in there too. ABBV, you can look at that. That's been trading well. That's another stock, another pharmaceutical trading well. Let's see here. Who was it? Priya. I see you, Priya. Priya was asking about CCJ. CCJ. We need to know about CCJ. The Chinese are going to use nuclear. They're going to build plants in China for on the moon with nuclear energy. So nuclear energy, look, I think is good. I think that the stock is great. We've been long calls here. I think there's a chance that at some point, nuclear energy is a clean way. Look, in order for us to go clean energy, we have to get out of this oil sort of complex. And it's all good to say we're just going to switch to solar or wind or hydrogen and all this. You still need energy to create this energy. That's the paradox. That's the funny part about it. You still need energy to create this clean energy. And the cleanest way to create the clean energy is nuclear power. And so what I like about that, what I just said, is that it's simple to understand. It can have legs, and we're starting to see positioning within the governments around the world to go to nuclear energy, or to at least create a new industry within their countries of nuclear energy. We're seeing new technology that is based on nuclear energy. And so I believe the nuclear energy has legs, as long as you're talking about clean energy, because the cleanest way and the amount of energy you need to create clean energy, it just doesn't make sense to go use fossil fuel energy to go use a lot of fossil fuel energy to go create clean energy. It doesn't make sense. So this notion that nuclear energy is dead, I actually think that the story is pretty good for the whole space. And I think that this, something like CCG has legs. And that's all I have to say about that. What else?
All right, I'm back. I'm sorry about that. That was
There you are. Oh man, we got rid of you already. You're back. Okay, good. Yeah, internet got killed because of thunderstorm.
Yes.
Okay.
Sucks.
Welcome back.
At least I'm alive, so that's good.
Good. I was talking about Bristol Myers. I was talking about CCG. CCG is Cameco, which is nuclear energy. Mm-hmm. And
did you talk any about Uber? Uber is interesting.
I got 5 minutes.
All right, I
got to run the city. But let's talk about Uber. Uber. It's funny. Uber is funny because I have not. Look at Uber. All right. Did you have my screen up, or is that?
Yep. Yours is up.
Yeah. All right. My screen. So my screen. Uber. I can't even say Uber. I always say Uber, which is bad. I said it. I have an issue with my brain where if I get caught saying something, I just constantly say I can't stop saying Uber. Okay, so Uber chart looks, to me, it looks really good. You know, again, let's just look at get a view, see what has happened. Let the chart tell a little bit of the story. Okay, IPO, we know that down. Does this sort of, let's move this to 2 years. You know, before we looking at the options, let's just get a sense of the stock, right? So Uber, most talked about IPO ever, right? Comes out, does well for, you know, half a minute and then drops down, then tries to reach its high, then falls. Okay, so has problems here with California, talking about gig economy workers and contractors, and there's someone who works at Uber is actually employed by Uber, or they in their own contractor. Okay, that was if they're actually employed by Uber, that poses a lot of problems for the company. Not only that, but then you had the coronavirus, and you had Uber obviously get down to a very low level here. So the stock gets drilled and then starts coming back. And this is one of those companies that I you know, as humans, maybe we got weaker with the coronavirus, or made our spirits stronger. But maybe, you know, our pockets probably got a little bit weaker with coronavirus. We're trying to save more people have lost their jobs as a whole. You know, companies have, for some of these companies, have gotten much stronger, leaner. It's not necessarily good because they fired a lot of people, but they're not spending as much. They got leaner, and they got focused. They got focused on new opportunities, right? Taxis don't work. Not enough people are actually jumping into an Uber. Then what are we going to do? How are we going to make money? What's the next thing? And they focused on Uber Eats, and they have taken that industry and made it what it is, and where there's new leads like Dash or DoorDash or whatever that is, but they're in that, and it's a whole nother business that they got to actually refine in the period of a few months. So I look at this chart and I say this is pretty constructive, where it's down. If you were long Uber, yeah, if you were long Uber and into the pandemic, and you stayed long from 40, really, you gave it a shot at 42. It went down, then it went back up to 42, and then it just dropped to 15, 16, and you're still long, then you're probably long for the long term. And so this thing is constructive because now it's followed this path here. And after they won this election based on this January issue that was brought up by the government, they said that, you know, these Uber drivers were contractors, not part of the company. And so that was a boost to Uber and Lyft. And now this stock has made a shift above 47, which was the old high over here. So to me, this looks like new stock has attracted, you see the volume here, 100 million, 50 million, 75 million. These are big volume days, new buyers, new people, and they like it here at above 48 bucks. And, you know, this took a break. This is a 1.5 year break of, you know, not much talk about Uber and Uber was overvalued. It's done. But now you have a $90 billion stock that is stronger, will be stronger when we go back to normal. And they're in different industries and have proven that they could build out different industries and be a leader in different industries. And what's next in the Uber, you know, in the Uber profile, maybe it's driverless cars and maybe they don't need contractors, but
Exactly.
whatever it is, you have, you know, opportunity there. So when I look at the options, let's look at the options. You missed Bristol Myers, by the way, the call buyers and Bristol Myers. I'll tell you that later.
Okay.
Uber, I don't, this again, I'm not paying attention, but what I do pay attention is when I look at March, you know, and I start seeing the 55s, the 60s, see this open interest, this positioning. I would like to go back and see when they bought these. So historically, I would like to go back to the 55s and the 60s. I want a full story. This is half the story. Half the story is there's bets made 55 and 60. The full story is when those bets made, how are they made, and were they actually buyers or sellers in this open interest? That's the full story. This today could say, okay, there's buyers, but I want to know March options 55, 60, and I'm going to go back. I got to look at the data. I got to see what happened. When did it happen? How did it happen? Why did it happen? Maybe was there news one day, and that's when I'm always trying to match if I go back in history and look, I try to look and say there was volume that day, and then I go to news that day and I say, what was the news that day? So I'm also trying to put myself in that day and saying, this was the news. Somebody came in to buy. They thought this was the opportunity. That's how I would look at it. I like it. Uber is something that I'm on. I'm looking at it. I see this and I'm tempted here. I'd like to get past, Georgia and see what happens there and move on. But look, the market seems to be in decent shape. There's a lot of these momentum names, but there's some names that are in decent shape, that are, like I said, they're leaner company than before. Look at the stock like Disney. Disney went down to 90, shot up to 180. It's now owns part of that Netflix. They're putting Netflix to the test. So it's important. It's important to understand how these companies will come out of this thing. Uber is one that they were allowed to refocus on other industries and refocus how they're going to re-engineer the company to make a lot of money. They found something, a good spot. It was updated by, it was moved to the front of the line as far as what they needed to do. Taxis took a little bit of a side, step. And now we're back on track. Now they're in 2 industries and probably going to get into the 3rd. Maybe there's the autonomous driving, and who knows what next and how it all comes down. But I think Uber is a stock that it's a leader. It's in its own industry. You're not going to find, it's very difficult to come up another Uber again. You have Uber, Lyft, and maybe there's one other that's still around there. But even Lyft is having a tough time competing against Uber. Lyft isn't in Uber Eats. Now as Uber can actually turn the dial on their driving and put Lyft out of business almost, right? Or paying on them. And so that's the power of becoming a leader, using technology to become a leader. It's, you can use something as a lost leader and then, almost like a monopoly does it. It was just, I'm going to lower prices here. I'm going to make the door wide open for everybody to use my products and close the door because I have them for all these other customers. It's the thinking that Baba did, and every one of these, Amazon, all these big leaders, Apple, the iPhone, the lost leader. They're not going to make they'll make some money on the iPhone, but what they really want to do is they want to get millions of people getting in the door. So when you find companies like that now we're talking long term, for long term, those tend to be the winners, the leaders, and the ones that will go over time. So it's a conversation between two. What are we looking at Uber for the next 20 years, or are we looking at Uber for the next 6 weeks? That's what we're always trying to balance.
Okay.
Cool.
Yeah, great.
2 o'clock. I gotta jump. But listen, let's go tomorrow. Let's do it again.
Sounds good. All right. Thank you,
All right,
Felix.
Mark, be good.
I want to
All
say
right.
thank you to everybody. If you're stuck this long, please leave a subscribe, leave a like, and share this to somebody you think might enjoy it. And I want to thank you for being with us. See you tomorrow.
Thank you, guys.